Hello, I'm Vishala Sri-Pathma. Let's have a look at how the markets in Europe have ended the trading session. Well, Europe's markets climbed and the euro jumped against the dollar after the European Central Bank said it was keeping its armoury of economic stimulus measures in place but would revisit them in October. Well, the European Central Bank thinks the Eurozone economy will do well this year. It expects it to grow by 2.2%, the fastest growth in a decade. And the boss of the bank, Mario Draghi, said that the bloc grew faster than expected in the first half of the year. He announced this afternoon that he's keeping Eurozone interest rates and the bond buying stimulus programme unchanged. And also, UK houses rose at their fastest pace this year in August, according to Halifax. House prices increased 1.1% from July, the biggest one-month rise since December, and building on July's 0.7% increase. And also, UK insurers have won a major victory by persuading the government to change the system used to work out compensation payments to accident victims. Now, the changes to the so-called Ogden rate will affect payments worth billions of pounds. They're likely to cut the amount that victims will receive in compensation payments, but also could result in lower insurance premiums for drivers. Well, let's get more detailed analysis of all those stories with Ben Kumar, Investment Management at 7 Investment Management. Ben, thanks for joining us. So we're going to start off with this story about insurers. Sounds like it's a pretty good day for them. We've seen share prices rise on that news. Is it going to leave a bad taste in the mouth of customers, though?
Yeah, I think it will. So the good news is that it's not a retrospective change. So anyone who's already received compensation at the negative rate will have that award kind of protected. The problem is that in the future, it basically assumes that if you have an accident and you get a lump sum payout, you will be able to invest it at a rate of around 1%. Now, given where interest rates are, and people are familiar with current accounts at the moment at basically zero, that's not something you can necessarily rely on. So there are going to be a lot of customers, a lot of consumer protection agencies saying, look, you can't just make these assumptions change because the insurers are squealing about it, for want of a better word. Share price is up today, though, but we will see. It does have the potential to cause some backlash. OK, well, let's move on to house prices. So this Halifax survey says August was a good month and it's building on July. Is this a broader trend or a blip? Well, I think it can go both ways with the house price surveys. You know, Nationwide do one that had a bit more of a muted response this month. I think what we've seen in the UK, and it's going to come as no surprise to anyone out there, is that there are still a lot of people waiting to buy houses. They've been waiting, in some cases, for nearly a decade since the financial crisis. And there's not a lot of new supply out there. So chances are, as long as no one's too worried about Brexit and about the economy or about wage rises, people are going to keep buying houses and their prices are going to keep rising. What we're looking for, though, is prices to rise outside of London and the southeast of England. And that does seem to be happening.
Well, one thing that isn't rising are interest rates in Europe. Mario Draghi keeping that unchanged. It's a bit strange because, you know, we're hearing about Europe adopting a looser monetary policy, but apparently he is open to that idea still. What does this mean for us in Britain? We're going to go on holiday to Europe and things are going to be pricier.
Yes, I mean, so first off, the euro is going to stay expensive. You know, it's rallied again today, as you pointed out. The second thing to note is that Europe is growing at the fastest rate it has grown since 2007. Now, whatever happens in Brexit and trade agreements in the future, Europe is still our biggest trading partner. And when your big brother across the channel starts doing well, Britain should do well too. So in reality, it should be a boost for the UK economy. We'll see whether this continues, whether the EU does change, well, ECB does change its mind and Mario Draghi raises rates. But for the minute, you know, the Eurozone is full steam ahead and being helped by the central bank.
OK, Ben, we'll leave it there. Ben Kumar there from 7 Investment Management. Let's have a look at markets before we go. The Dow edged a bit lower off the back of a lower dollar today as well. The FTSE 100 ending in positive territory. Well, that's it for me. I'll be back tomorrow with more business news. Simon.